All right, welcome to a new week, new month, November. It's Monday, the 4th of November, just after 9:30 Central. Now, we knew coming into today it might be slow and rotational. The volume was light. It's unemployment Monday, which means the Monday after unemployment Friday. It's gap open higher. We open up and rally. It's going to have the shorts really in trouble, but they really didn't. They're able to come back, and net weren't able to get away from the open all day. So the fact was you might be seeing these dials here. If you're used to watching my YouTube videos, coming to the room, you didn't see these dials. Now you do. Something that we created to just give an easier and better sense of in other markets, what's stronger or weaker. If it's important to compare and contrast, which it is, which one's strong, which one's weak. And so different colors, different markets. If you get one dial, I'm not going to explain the dials for this. I'm just going to get into, or just after 9:30 Central, you had the ES. And remember, if you're watching a chart, reading a chart properly, you're looking at the rotations and maybe consolidation box within your periodicity. And you're trying to predict, are we going to go up after this box or are we going to go down? Well, if you do know what the strong one is, and the strong one gets weak, let me say that again, the strong one gets weak, that's good information that the market you're trading, if it correlates in the same direction, might also get weak. It's validation that the downside, in this case, in this area, might be the right side. So maybe you're bearish and you want to get short for another reason, and now you're better at reading ancillary markets. And the strong one in this case was the Dow. Coming into 9:30 Central, they had rallied. They were stronger than the NASDAQ. I think the NASDAQ and the Russell at this particular point. They had jumped first, and they started to get weak in here. So the strong one got weak and got hit just after 9:30. So it's a little harder to show it just looking back on charts, but in real time, when you're analyzing and listening to someone to analyze other markets, no matter what market you're trading, but other markets that influence your market, and there are several out there. It isn't just news and earnings and geopolitical information that drives the market. It's correlations, right? Car dealerships are influenced by car manufacturers, and car dealership to dealership, T-shirts, big box store to big box store. So why wouldn't an S&P mini be correlated to the NASDAQ, to the Dow, to the Russell, to the yen, to the DAX in Germany? Of course they are. Our job is to be detectives, to find a leader, lagger, to find validation within a move. So if you're short the ES and it goes down your way, if you're just subjective, you'll get excited. If you just let your emotions run you into comfort, you'll emotionally get comfortable if the market's going down and you're short. But if it's going down and nothing else is going down and validating it, maybe it invalidates the downside and you shouldn't be comfortable. Because if it goes down and that's the only gauge you're using to know if you're comfortable or not, well, if it goes down and you're short, you're going to be comfortable all the time. But you might be, or you should maybe be uncomfortable if you're actually watching what matters and being objective. So don't let your emotions and just it ticking in the way of your trade dictate whether or not you're comfortable. Does that matter? Yeah, of course. I'd want it to tick my way and I'd become more comfortable, but don't let that be the only reason why you're comfortable short or comfortable long, because it's working. See if other markets are validating the direction. See if there's more oomph into the trade, and then you'll find better locations to maybe exit it before your target, because it's just not going like it should. Because when you see good trades, winning trades that follow through and go all the way to your profit targets, you generally see other markets cooperating and all following each other. I think the dials will help give you a sense of who's strong, who's weak, and just a one look instead of having to study highs and lows. But I don't want to get into a tutorial in these dials just yet. These are just 5-minute dials. Each color represents a different actual market. So again, if the strong one gets weak, then the weak one should be real weak, and you should be downsides the right side